Sources of finances examples. We will be discussing the following external sources of finance. Bank OD. Bank overdraft is a facility provided by the bank for current account holders to withdraw money from the account even though the sufficient balance is not available to fulfill the requirement. The account holder can withdraw cash within the given range of value by the bank, and interest is only charged on the used amount. This is a flexible source to finance short term cash requirements. Borrowing. There are various types of borrowings available in the financial market, such as term loans and loan stocks. Term loans are offered by financial institutions and banks. The terms and conditions related to these loans can be negotiated according to the requirements of the business. Debt factoring. Debt factoring is the selling of a company's trade receivables at a discount to a factor that then takes the risk of the trade debtors and receives cash as the debtors settle their payment. This can be a source of both internal and external source of finance. Invoice discounting. When a financial institution or a factor agrees to provide a loan based on a proportion to the face value of a firm's outstanding credit sales, it is known as invoice discounting. The loan provided by the institutions or factors must be settled by the organization within an agreed short time period. Unlike the debt factoring, the risk of acquiring settlements from the trade debtors lies on the business. Hire purchase agreements. Under this agreement, the buyer acquires the product by only paying a part of the purchase price and the rest by paying on an installment basis. When goods are acquired through hire purchasing, the buyer only gets the possession of the good and the ownership will be transferred after the final installment is settled. Finance leasing. A lease is a contractual agreement between the owner of the property known as the lessor and the use of the property known as the lessee. The lessor is giving the right to the lessee to use the lessor's property for a specific period in exchange for a specific amount of cash payments. The ownership of the property, however, lies with the lessor. Venture capital. Venture capital providers are individuals willing to fund the businesses that do not have access to the stock markets. They support firms for startups and expansions. Venture capital financing is usually long term. Angel investors. Angel investors or business angels are those well off individuals who are willing to invest in a business. Angel investors prefer to invest in startup businesses and for the expansion of the business. It is an effective way of financing a business as these investors does not engage in the day-to-day activities of the business. Ordinary shares. These are the shares that have the ordinary rights on the company's profit. Ordinary shareholders are usually regarded as the owners of the company and they have special privileges such as voting rights and company decision making. The dividends of these shareholders are determined according to the profit earned by the business and they receive it after the dividends of the preference shareholders are settled. Preference shares. These individuals are also considered as the creditors of the business and a fixed percentage of dividends are paid to them. They are not able to enjoy special privileges as the ordinary shareholders. Whether the business earns a profit or not in the relevant financial year, the dividend to these shareholders must be paid. Debentures. Debentures are a sort of financial instrument that typically has a longer duration than 10 years and isn't secured by any collateral. The sole factor supporting debentures are the issuer's credibility and status. Debentures are widely used by governments and enterprises to raise money or capital. Certain types of debentures can be converted into equity shares, whereas others cannot.